Welcome to this Yahoo Finance special, The Future of Finance. We are breaking down the unique dynamics that make up the financial system as we know it today. Our special guests will examine the way financial services are intersecting with technology and digital assets and how it affects our lives today and in the future. We'll also have an exclusive look at the newly launched Bloomberg Grayscale Future of Finance Index, which tracks the rapidly evolving digital economy. Join us as we explore the market forces that are shaping our financial future. Welcome to our special, The Future of Finance, brought to you by Grayscale. I'm Akiko Fujita. Over the next hour, we are taking a closer look, examining and defining the many dynamics that are shaping our financial future. We've got a long list of guests lined up for you over the next hour, but we are kicking things off with a discussion about the current state of finance. Joining us now is celebrated author and academic, Vikram Mancharamani. Vikram, it's great to talk to you today. The show is focused on the future, but I want to start on the present and the current environment we are seeing in the financial markets. It kind of feels like there's a bit of a reckoning that's playing out, especially among the tech companies that have been able to sell the story of huge growth, profitability at all costs in exchange for some pretty lofty valuations. Yep. What do you see when you look at the investor today?
Yeah, well, first of all, okay, thanks for having me. I'm thrilled to be with you and to share some of my thoughts here. Look, I think what's very simply happening is economic disruptions have created an environment with inflation. Inflation is leading to fears of higher rates and sort of more appropriately priced money equals less liquidity and greater discount rates. So the longest duration assets, if you've got tech companies with earnings way in the future, those future earnings are worth less in an NPV basis if you discount them back with a higher rate. So that's part of what's happening right now in the market. So let's talk about that. Number two, we've had, I believe, a passive investing bubble that's been brewing and may in fact start showing some signs of cracking and bursting here. I don't know. We need more time to see it validate. But what do I mean by the passive investing bubble? We've had flows driving prices more than fundamentals in many sectors. And part of that's being driven by just the massive amounts of money flowing into some of these, indexes, if you will. So take the ESG phenomenon. A lot of money went into ESG related funds. Those funds didn't have many places that they could park as much money as they were receiving. And so those flows drove stocks to levels perhaps that they might not have had they not had this ESG style mania bubble, if you will, that was brewing on the side. So the desperate desire to own green assets through lots of funds flowing in, profits in the future, but discounted at very low rates, so therefore worth a lot in today's terms. I think that's part of the story we're talking about here.
You mentioned ESG. Let's talk about the biggest ESG player, one of the biggest, and that's Tesla. And I like what you wrote about a year ago, specifically on Tesla. In an op-ed, you said the faith in market efficiency, the focus on being green, the fear of missing out, and the increasing power of storytelling by celebrity leaders have created fertile ground in which the Tesla bubble took root and grew. I believe it's about to burst. That was over a year ago. Yep. How much of that story, what you lay out there is happening with Tesla, can be applied to other companies?
Sure. Well, first of all, I was way early, I think, on the Tesla thing. And so maybe that's wrong. It's conceivable. But what we had happen in a situation like that, market efficiency, let's talk about each of those points you just raised. Market efficiency, we have faith that prices are right? That's the reason the passive investing bubble grew. Why bother paying for active management? Doesn't make sense. If you're an investor, why pay those fees? Why bother to have people do research? Prices are right. Buy the index. And so, of course, Tesla's a big component of certain indices, ESG indices for sure. Therefore, the price is right. Don't question it. And so you saw as that happened, fewer people shorting it, that some of them got squeezed out, et cetera. And so that definitely took place in terms of the market efficiency. This fear of missing out, that's a classic bubble dynamic, right? When higher prices result in more demand, not supply, That's really interesting, right? Because higher prices, more demand, equaling higher prices, equaling more demand, you get a self-fulfilling cycle going up. By the way, that can happen going down as well, right? So lower prices, less demand, lower prices, less. So you can see that dynamic in reverse. Celebrity CEO. I mean, come on, Elon Musk is the celebrity CEO of celebrity CEOs, the controversy, the style, the sort of everything about him sort of smacks of that celebrity CEO who gets a big pass on governance, on other topics in ways that maybe the non-celebrity CEO doesn't get. And so maybe has to explain more. Further, there's this visionary logic, which is it's all in the future. It's all coming. We've got full self-driving. We've got robo-taxis. We've got solar cells. We've got battery. We've got, you name it. We're going to Mars. We're going to send a car into Mars. Whatever it is, it all is believable to those who want to believe. And so the minute sentiment shifts, you can see sentiment shift quickly. And for a stock that's, I don't know what its valuation is at this point that we're talking $1 trillion, somewhere around there. And yet, you know, I think if you got rid of some of these pressures that have been supporting the stock, that maybe the stock wouldn't be where it is. But yes, to answer your question explicitly, I do think the same dynamic is visible in other securities.
Let's talk about what some would say is the future of money, and that's cryptocurrencies. You know, we're coming off of a banner year in this space, crypto assets totaling at some point at the highs, $3 trillion. We're talking with the T. Yeah. Where do you think crypto fits into the broader financial system? Not currently, but when you think 5 years, 10 years down the line.
Sure. Well, I think we need to see and pay attention to what's happening with central banks. And if the political motivation is to constantly print money and debase currencies, keep going, what investors should do to hedge from that risk is buy currencies that cannot be printed, right? Things that will be forever scarce. And historically, that was gold, silver, precious metals, and for those that wanted levered exposure to it, perhaps gold mining, silver mining companies, et cetera. But in a more modern era, in a digital era, one that may appeal to millennials and sort of younger folks that are more digitally native, you might think that, well, cryptocurrencies and Bitcoin might be a digital version of that non-printable currency. And so, you know, I'd go back to something Jim Grant has said in describing how to think about gold. He said you should think about gold and precious metals as not assets, but almost anti-assets, one divided by confidence in central banks. And so if you have rising confidence that central banks will raise rates, stop printing money, et cetera, well, then that denominator is going to go up and your ratio will fall. And by the way, as the Fed talk has entered the sort of equation of raising rates 4 or 5 times this year, we're going to stop printing money. Surprise, surprise, we've seen a headwind, if not, you know, a downdraft in cryptocurrencies and Bitcoin specifically. So I think that's a decent framework for thinking about it. Now, I do think that political motivations for printing money, having less priced, you know, lower priced money, et cetera, will continue to be persistent. And so in the long run, I got to imagine things like cryptocurrency, Bitcoin specifically, likely have a good future. Further, there's more adoption. And as it gets more stable and less volatile, it's going to be adopted for different uses. I can't claim to understand all the uses that it may have. I was talking to someone who said, you know, the number of the dollars of remittances that are being sent back and the fees that are charged in remittances from like Middle East to the Philippines. I forget exactly what it was, but think of the democratization of money transfers that become enabled this way. So I think there's going to be a lot of activity in decentralized finance and cryptocurrencies, and that world's going to be really exciting on a 5+ year view. There'll be a lot of volatility. People need to buckle up and go on the ride, but it is going to likely work out well.
Yeah, on something like remittances, we've already seen the use cases, especially in emerging economies. You're a lecturer at Harvard, and I know you speak to students, your class specifically, humanity and its challenges, which is a very broad topic. What are you teaching the next generation of business, financial leaders? What do you tell them?
Yeah, so look, the big sort of lesson of my class is that we should all try to be more systems oriented in our thinking and our approaches to problem solving. What we're trying to do, and what I try to do with my students, is teach them to think broader, to focus more on connecting dots rather than generating dots, that to balance breadth with depth, and fundamentally to learn to think for themselves, which is, hey, this may sound like it makes sense, but when I connect the dots and I look at the feedback loops, that in fact, this may produce the very opposite conclusion that we were thinking we were seeking, right? And so one of the examples a lot of people have used is, seatbelts. Do seatbelts make drivers safer? Well, if it didn't change their behavior, the answer would be yes. But when you put a seatbelt on, you feel safer and you drive with a little more aggression and possibly even more risk. And does that offset the benefit of putting on the seatbelt? Same thing we saw with helmets and football players' concussions. And so there's this feedback loop logic that crosses silos and asks questions about assumptions and forces a connection focus. Sort of asks you to focus more on connections than generating the actual components or dots. And that's ultimately what I'm teaching. And we do it across a bunch of cases: inequality and capitalism, technology and jobs, the future of space, et cetera, et cetera.
It's a lesson that we can all take away, not just your students. Vikram Mancharamani, it's great to talk to you today. Really appreciate the time.
Great. Thanks for having me.
Coming up, how to keep up with the rapidly evolving digital economy. We have an exclusive look into the newly launched Bloomberg Grayscale Future of Finance Index. That's coming up after the break. Yahoo Finance's presentation of the future of finance is brought to you by Grayscale.
Welcome back to this special look at the future of finance. And joining us now is Dave Lavelle, Grayscale's global head of ETFs, and David Gideon, Bloomberg's head of multi-asset index. And guys, we bring you here today because you're launching an index in an ETF. You just did that last week, the Bloomberg Grayscale Future of Finance Index and its corresponding, ETF. And David Gideon, we got two Daves here, two Davids, so I'm going to have to use your last name so we don't get confused. But David Gideon, I want to throw this to you just in terms of the constituency. I'm looking at some of the components here: PayPal, Square, CoinDesk, Robinhood. Those are some of the big names. We got some smaller players too. I'm just wondering where you're going with this. What is the theme you're trying to represent?
Yeah, thanks a lot for the question, and thanks for having us as we celebrate this great accomplishment for Bloomberg and Grayscale. And what we are trying to do and trying to accomplish is really be able to benchmark out what is the future of finance and be able to find and identify the companies who are most involved within the digital economy. And so what Bloomberg set out to do through our independent research, through our Bloomberg intelligence team, is to be able to go through and develop out the theme. So define out what we mean by future of finance, and then define the names who are part of that. When we think about the financial foundations, digital asset infrastructure, and technology solutions, and then through the BI process, they're able to go through a quantitative and qualitative review over those names, assign the companies into those respective categories based off of their exposure to the theme, and end up building out the index off of this. And so, when we look at it of what the index is trying to do, the index is benchmarking what we believe to be the future of finance. So the membership today can change. It can change in next quarter and the quarter after as we go through that process each quarter. And so really as an index provider and in leveraging the research that we have here at Bloomberg, we're really trying to create the framework for the ongoing benchmarking of really the revolution in finance and what is the next stage of the digital economy.
And Dave Lavelle, let me get your take on this, because we've seen a number of products from your company, Grayscale, probably the most famous of which is the Bitcoin exchange traded product, notably not an ETF. But this index right here, this ETF is not just trying to track crypto or be some kind of proxy. It's really about the future of finance, which I understand is in the name, but it's kind of a bigger picture. Would you agree with that? And then what was some of the development process that you went through here with Bloomberg and perhaps the other Dave and some of his colleagues?
Yeah, so you hit the nail on the head. This really is not a Bitcoin replication product. As Dave Gideon mentioned, this is about defining the digital economy, and we believe the future of finance, and the Grayscale Future of Finance ETF in partnership with Bloomberg is really accomplishing that. This is about defining a new investment theme. It's not, dissimilar to, themes that have been defined in the past that at the time of their launch really weren't household themes or household names. Think cloud computing, 5G, robotics and automation, right? The digital economy is a theme that we're defining, and we believe is going to be the future of, how investors really have the opportunity to experience the digital economy. And so, we had a lot of conviction around the notion of the digital economy and this theme, and really being at the bleeding edge of the digital economy ecosystem and the digital asset ecosystem as a member of, digital currency groups, broader portfolio of companies. We came to Bloomberg and, with strong conviction, and worked with them to build out the methodology.
And Dave Gideon, I was looking at the list of companies, a list of components here, and one of the things that stood out to me was the lack of certain companies. In other words, there's no MicroStrategy in there, there's no Tesla. Both of those companies have huge Bitcoin holdings. In the vein of you're not trying to replicate a Bitcoin strategy, is that the reason why that these companies aren't represented, or is there some kind of other criteria?
Yeah, and this is one of the things that we set out to accomplish with the index, is almost have a hallmark of what's not in it, because it is not a Bitcoin replication. It is not a crypto basket. It is a basket that's meant to represent the future of finance and what is going on with the digitalization of financial transactions, financial management, asset management, and to do so and to include companies who are, I think we want to call them crypto adjacent, like MicroStrategy, who continues to acquire Bitcoin, Tesla, who noted they hadn't transacted any further at their last earnings call. Overstock is another traditional name in this space. Even some of the semiconductors who are obviously very correlated in terms of crypto demand from mining. We really wanted an index that avoided those names, because we're not trying to have a correlation to one for Bitcoin to provide that proxy. We're really trying to create exposure and be able to benchmark exposure across the financial ecosystem. But as that financial ecosystem digitizes, modernizes, and evolves, we want a basket that has become an index that can track that evolution going forward.
MasterCard recently announced that they're going to give crypto access to a bunch of their customers. I'm wondering if MasterCard or a company like it would be under consideration for inclusion in this index, noting that you also have PayPal as well.
Yeah, look, I mean, I can't comment in terms on, on future inclusions, but as our methodology of, looks at the changing dynamics of companies, and as companies get more involved in embrace and invest further into the digital economy, then it's very possible that they can start to become part of this ecosystem. Exchanges would fall into that category. Other asset managers can also fall into that category of potential future ads, but there's still more development in those business lines to get pure into the theme in order for them to be part of it. But that's one of the things that we're doing here at Bloomberg from the thematic perspective, is to be really transparent about that. And so, on the terminal, you're able to go and run a function and actually see those quarterly results, see the analyst reviews on these names each quarter in terms of why they were included or excluded. And we think that will be a really important differentiator going forward for the thematic offering, so that way people can track almost in real time the future of finance.
So is this going to be like the Cathie Wood ARK Innovation Funds? She sends an email to me every night saying what she bought and sold, but maybe with a little bit more commentary. Is that what you're talking about?
It would be great if it's able to be as successful as Ms. Wood has been, but no, it is not active in that regard. Once a quarter, the index membership will change. You'll be able to see the adds and deletes off of that index membership via the terminal. It is still very much a rules-based, objective and transparent index that is tracking this theme.
Coming up, we're going to take a look at the regulatory structure of Bitcoin. Are we going to get that spot Bitcoin ETF after this? Welcome back to this special look at the future of finance. And joining us now is Dave Lavelle, Grayscale's global head of ETFs, and David Gideon, Bloomberg's head of multi-asset index. I just want to talk about some of the regulatory aspects with the SEC. We have Chair Gensler, Gary Gensler in there. He's been there for about a year. I've seen your commentary on shows about the Bitcoin futures ETF and some of the hurdles that we've had getting those approved, and then the Bitcoin ETF conversion process for Grayscale Bitcoin Trust. In general, how has it been like working with the SEC over the last year as opposed to some of the prior administrations?
Well, look, this is, a story that we have been seeing for the past, 25 plus years with ETF innovation. When SPY came to market in 1993. It was a really innovative and a really bleeding edge, cutting edge, investment theme, which was S&P 500 with market cap, weighting. And as the ETF marketplace has continued to evolve, different exposures that were novel at the time have required regulatory review and regulatory approval. And so this is really no different than anything that we've seen in the history of the ETF marketplace. We're sympathetic to the job that the SEC has to do. And we've been really, fortunate to have a very strong working dialogue with the SEC and are happy to have a 19B4 rule filing in front of them that will allow them to review, the opportunity to convert GBTC into an ETF. And we think now is the right time. With the approval of, the Bitcoin futures product, we believe now is the opportune time to have a spot product approved by the SEC and available for all of our investors.
It's interesting that you mentioned the SPY ETF. It's part of my Twitter handle at SpyJared, but also at Yahoo Finance, we've interviewed Spider Woman. She was the lawyer who created the framework for the Spider ETF trust. Her name is Kathleen Moriarty. And during the conversation, I think this was several years ago, but she remarked that in the interim, so much has changed in the world, but not a lot has changed in the legal and the regulatory structure. And a lot of it is just a little bit antiquated. I'm wondering, is there more of a drive to innovate nowadays and to finally shed some of the structures and achieve some new ones that investors can really gain from?
Look, the ETF wrapper is really battle tested. I know Kathleen quite well, and she, is as good as anybody on trust law. And she certainly was at the forefront of bringing the ETF to the marketplace in conjunction with the American Stock Exchange and a number of other members of the ETF ecosystem. We don't see any problem with, the ETF structure, the ETF wrapper. In fact, it's quite battle tested and has really stood the test of time in a number of really volatile markets since its inception. And so, we believe that we're really actually just talking about, when, not if, which is really exciting in terms of a Bitcoin spot ETF coming to market. And additionally, for a long time in ETFs kind of, innovation and evolution, there's been a question around the ETF wrapper and a question around the underlying asset. We've gotten to the point where the ETF has been, battle tested and really has stood the test of time in a way that no one's really talking about the ETF in terms of its, viability to hold the asset. It's really talking about, the Bitcoin as being held by the ETF. And that's really something that's exciting, that the ETF wrapper is actually, a vote of confidence for the underlying asset.
And David Gideon, we just have about a minute or two left. Want to get your thoughts on everything we've just been talking about. Give you the floor. Any comments or commentary in that regard?
Yeah, I think the wonderful thing that we have seen over the last, history now, going back to 94 or 93 with the ETF is the evolution and constant evolution of new products. And whether that's new exposures in terms of bringing international securities into domestic investors for the first time, fixed income, futures-based commodities, physical-based commodities, thematics, factor strategies. There's been so much evolution, and it's resulted in just massive revolution within the asset management industry and within the investing industry. If you think about the amount of money saved for the common investor in terms of what they're able to access now with broad-based index funds compared to the traditional active side, it becomes a very natural step for new product to be introduced and for the wrapper to be able to, as Dave Lavelle has said, for that wrapper to be able to handle this, because it's handled so much over the last several decades. It's just a very natural step for us to see, and it's one that, as an index provider, we're excited to continue to partner with very dynamic firms and bring our indices out into the marketplace in conjunction.
Well, we have to leave it there, but really appreciate both of you, Dave, stopping by here, and congratulations on the launch of your products, the index and the ETF. Dave Lavelle, Grayscale's global head of ETFs, as well as David Gideon, Bloomberg's head of multi-asset index.
Thanks for having me.
Thank you very much.
Coming up next, a closer look at the companies making up this new index and how they are redefining the future of finance. We have two special guests, Coinbase CFO Alicia Haas and Silvergate CEO Alan Lane. Stay tuned.
Welcome back to this special look at the future of finance, sponsored by Grayscale. I'm Brad Smith, and it's great to have you with us. Joining us now, we've got Alan Lane, who is the CEO of Silvergate. Alan, great to have you here with us. We know Silvergate to be an innovator in the fintech and cryptocurrency space. And we got to get your perspective. When you think back about the pandemic and how it's accelerated the adoption of digital currency, what sticks out to you the most about that period of time and the acceleration?
Yeah, Brad, thank you. It's great to be with you today. And you know, one of the things that we experienced, and I'm sure it's not unique to Silvergate, but any company that was focusing on a digital strategy likely saw that strategy accelerate significantly through the pandemic. And you know, we've experienced just a tremendous amount of growth through the pandemic. And one of the things that we did early on was we went to a remote first work environment. And I can honestly tell you that we would not have been able to keep up with the growth that we experienced if we were forced to hire folks in San Diego, as opposed to hiring them essentially all over the country. When the pandemic started, we had almost all of our 200 employees working at Silvergate's headquarters in La Jolla, California. Today, we have a little over 300 employees, and we have employees in 32 different states.
Wow. And so considering that acceleration in the adoption of digital currency, this has also prompted even more discussion around what regulation may look like, or some of these central bank digital currencies, CBDCs. And as that conversation accelerates as well, what does that signal for the utilization of existing coins that have been out there for years and either utilized or held as an asset?
Yeah, so clearly the Bitcoin and Ethereum assets, you know, which have been kind of the granddaddies of them all, have certainly experienced a lot of adoption. The central bank digital currency kind of jumps the curve and goes all the way to the concept of central banks issuing their own currencies on a blockchain. We're kind of thinking about that right in the middle between a CBDC on the one end and decentralized tokens such as Bitcoin and Ethereum on the other. And we're more focused on US dollar-backed stablecoins, which there are currently existing stablecoins in the market that are primarily used for cryptocurrency trading, where we see an opportunity to bring dollars on the blockchain for usage in payments and cross-border remittance.
How has what we've seen in terms of the adoption and the acceptance, how has that also prompted industry-wide prioritization of wallet or asset security?
Yeah, so digital wallets are really becoming kind of the way most people interact. Whether you know, it started with just having a mobile app, you know, mobile banking app on your phone, but these days, whether you're shopping for something on Amazon, whether you're paying for something, you know, coffee at Starbucks, you know, we're all using some form of digital wallet. And this gets back to this integration where we see that taking the concept of a digital wallet, where you're carrying this wallet around on your phone and it's with you essentially 24 hours a day, 7 days a week, and the ability to have US dollars tokenized and resident in your wallet so that you can pay for things without actually having to use a credit card or a debit card.
Now, at Silvergate, it's also been a big time for you as you've acquired DM assets from Meta Platforms. Consolidation in crypto and the acquire to grow methodology historically seen in tech. Do you believe that's something that we're going to see going forward from here? And what particularly can Silvergate bring to those assets that were acquired that Meta Platforms was not able to bring to the market?
Yeah, so just a quick distinction there. So you know, Meta had previously kind of spun off that technology to the DM Association. We in turn have purchased the technology from the DM Association. So we weren't working directly with Meta, but rather with the DM Association. And what we believe is that the DM protocol is a purpose-built blockchain specifically built for payments. Some of the other existing blockchains that are out there that stablecoins are running on were not specifically built for payments, for a payments use case, and specifically with some of the proprietary regulatory compliance features that are built into the protocol, things that we were working on with DM last year. And we believe that the combination of the open source DM protocol with the proprietary elements that we've acquired, combining that then to issue a US dollar-backed stablecoin issued by Silvergate, run on that blockchain, we think that that will bring this into the regulated framework that the US banking regulators are looking for.
What do you believe the reality is for the future of finance and perhaps the roadmap to get there?
I think we're all very accustomed to using our phones and using the apps on our phones to pay for things, to hail a ride from Uber, to buy things online, to use the digital wallets when we're at the store, et cetera. But a lot of that is running on rails, the existing credit card rails, the ACH system, et cetera, which in many cases, adds a lot of cost, and then that in turn essentially keeps folks outside of the system because they can't afford to kind of enter. And but yet almost everybody has a phone. And so if we can get to the point where we're just tokenizing dollars and allowing folks to use them in these apps so that they are transacting 24/7 using their phones, spending dollars or fractional payments. This is one of the other things is doing micropayments, which becomes cost prohibitive when you're using the traditional layers. I think it's revolutionary, and we're really looking forward to being a part of it.
Alan Lane, CEO of Silvergate, joining us today. Thanks so much for the time, Alan. And everyone, we'll be right back with another company leading us to a bright new future of finance. Alicia Haas from Coinbase is here next.
Welcome back to this Yahoo Finance special, The Future of Finance, brought to you by Grayscale. I'm Brian Sazi. Joining us now is the CFO of Coinbase, Alicia Haas. Alicia, nice to see you again. Good to get some time with you here. This whole special is really focused on the future of finance. What role do you see crypto playing in that future?
Brian, so nice to see you again. Thanks for having me this morning. So we believe that crypto presents an opportunity for a new financial ecosystem. Essentially, we think that any financial asset can become a tokenized form of value. And that enables us to see a world with faster payments, cheaper payments, global payments that operate at the speed of sending an email, sending a text. And that we think that it will have new financial infrastructure built. You've seen the growth of decentralized finance, which we call DeFi, now enabling peer-to-peer lending, peer-to-peer insurance. And I think that we're going to see continued growth and innovation in this space built on this new technology.
Yeah, no, to your point, there seems as if there's so much going on in this space. I mean, there's been an explosion in all things cryptos and platforms. You know, if someone is new to the space, how should they approach investing in it, or even thinking about the growth trajectory of this industry over the next decade?
Oh, wow. So I think that people should think about crypto the same way that Coinbase does, which is that it's just a tremendous technology innovation, and we're just getting started. This is the earliest days. And so it's going to enable new ways that we have our financial system, as I mentioned, through decentralized finance, a new way that we engage with applications through the development of what we call decentralized applications, or dApps, and the internet. And so I think that what 2021 brought us is this promise now of an advent and growth of what we call Web3. And what this is bringing together now content, which we've had on the web, but merging that with payments and identity. And that is going to create this new ecosystem of innovation and growth that I think will be really exciting for consumers in the decade ahead.
We're not very far removed from 2021. We're about a month and a half in or so. I know time moves fast, but you know, as someone leading Coinbase as CFO, what were some of your biggest moments for last year, and how might you use them to help inform what you do in 2022?
So 2021 was a huge year for crypto and for Coinbase across the board. So I think what we saw in 2021 thematically was just huge institutional interest in the crypto space. They came in huge, unprecedented numbers. We also saw DeFi gain tremendous traction. We saw NFTs explode. I mean, we had a headline of a $69 million NFT trade. We also saw the industry focus on scaling and regulation, which I think are really important foundational elements. And so ETH completed a major upgrade, preparing for the merge of ETH2. We saw regulators and lawmakers across the globe start to focus on crypto, and I think that that will create a level playing field. And so for Coinbase, what we're doing is we're continuing to just build a platform to enable easy to use products for our customers to gain access for all of the innovation that's happening in crypto. And we want to expand that globally.
You mentioned regulation, and you, if I'm correct, you did testify in front of lawmakers. And I think the industry agrees that some form of regulation is good, but when do you see it coming, and what would quantify as good?
We did testify, and we were really thankful for the House making that an opportunity for us. We're very optimistic that regulators and lawmakers in the US and globally will make the right decision when it comes to smart crypto regulation. We've seen significant engagement across a variety of lawmakers over the last couple months, and we think that there's going to be action soon, quite candidly. What we've seen, though, is that we're starting to have meaningful dialogue with the industry, and that's what we really value. We wanted to ensure that there was conversation, that this is a transparent process, so that we harness the good of this innovation, but also do it in a safe way for the consumer. So we have a long way to go. We're in the very early innings, but I think that people are starting to see the potential, and I think that we'll get to a good place.
Being that this is still a new company, it's a new technology, I imagine the skills of being a CFO at a Coinbase are a lot different than, let's say, leading a packaged good company.
So I think what we all learn here is to live with volatility, live with a variety of outcomes. So we plan in scenarios, we plan for ups, we plan for downs, we plan for sideways. And I think you just have to be a little bit more flexible and dynamic in your thinking. And the industry moves at such a fast pace that we're constantly reevaluating what our roadmap looks like, where our resources go, what we should be focused on. And so you have to be a little bit more nimble to be operating in crypto, I think.
Coinbase CFO, Alicia Haas, always nice to see you. Thank you for giving us some time. We'll talk to you soon.
Thanks, Brian.
All right, coming up next, seeing around corners, Matthew Blake from the World Economic Forum joins us next.
Yahoo Finance's presentation of the future of finance is brought to you by Grayscale.
New York Federal Reserve, giving him a vantage point into what the future may hold for the global financial system and finance. Matthew, thanks so much for being here. It's great to see you.
Pleasure to be here with you again.
Matthew, I want to start with a macroeconomic question. What's your sense of outlook for the global economy here? We're dealing with Omicron. The pandemic is continuing. How do you see that impacting global growth? What do you see as the biggest risks to global growth this year?
We had the IMF last week issue some guidance to the downside for global growth. I think that's that was a telling print for 4.4%, down about half a percentage point. There's no doubt that Omicron has yet again thrown a curveball at us from the standpoint of the pandemic. You know, people being forced to stay at home, either sick or working from home, aggregate demand therefore getting hit. So it's been a tricky period here. Supply chains also have been impacted. So not all that surprising that we've seen a bit of a revision. We will also see what the future holds. I think as a global population, we're coming to the difficult realization that we're dealing with an endemic here. This is not a transitory thing. We will be confronted with future scenarios where different variants crop up. And it's really about being resilient and prepared for that process, which is not going away anytime soon, unfortunately.
To your point, you mentioned the supply chain issues, and obviously part of that has been COVID, the pandemic. So do you see that kind of becoming a permanent basis for inflation and creating a scenario where inflation could be sticky, leading to that upward wage spiral inflation? Or do you see inflation coming back down later this year? And also, given that the U.S. Federal Reserve is set to raise interest rates to combat inflation, how do you see that rippling through global markets?
It's a very tricky period. I think it's the multi-trillion-dollar question of whether or not inflation is sticky or transitory. There's huge debate on all sides. My sense is, again, like as we work through the pandemic, we get better at dealing with these different waves, things will settle down. But it's a matter of acculturation and familiarization with being resilient and putting up with this. There's no doubt when we take a step back and look at inflationary trends that we are essentially in a new paradigm here. I think we heard that loud and clear from the Fed last week, that this is nothing like 2015, 16, 17. We are in a new place. The tone was very hawkish. And, the Fed has the tools, both in terms of communication, which they've already started, and also in the ability of raising interest rates, be it 50 basis points or 25, on a number of different occasions over the months to come, to try and take some of that excess out of markets, out of the economy. And it also has, obviously, the balance sheet. You had mentioned that I'd worked at the Fed. That was back in the 2010 timeframe. The balance sheet of the Fed at that point was $1 trillion. In February 2020, at the outset of COVID period, that balance sheet was at 4 trillion. And as of recent times, we're up to 9 trillion there. So tapering that, no longer being a consistent buyer in markets is going to have an influence on asset prices. There's no doubt about it. And it will take a little bit of time for markets to digest that. We've already seen volatility in some of the more liquidity sensitive sectors, be it tech or crypto. And the market will work through those changes.
So shifting more to a longer futuristic outlook, right? Where you're in your title, it says you look at the future of finance and financial systems. What are the secular trends, Matthew, that you see impacting the future of finance? It seems like a blockchain technology, digital assets could be one. But if you look out 10, 20 years, how are consumers, investors going to interface with financial products?
Yeah, we do try to take a futuristic view. I think 10 to 20 years is very far out. If you look back over what has transpired over the past decade and certainly over 20 years, it's quite remarkable. Difficult to make predictions that far out. But I think certainly the push towards digitalization more broadly was a trend already well established, but accelerated significantly during the COVID period. Technologies like artificial intelligence, machine learning, some of the chat bots and robots, they were critical technologies as we went, the global population pivoted toward working and living essentially out of their homes. And the 6 billion smartphones that are out there became our portal to all things in life, including financial services. So firms had to adjust very rapidly for onboarding and also for risk mitigation. So looking at fraud, nefarious transactions, AML, KYC. So, and doing that with the benefit of technology supporting those processes was huge. So we saw a major uptick in adoption. We saw a major uptick in a migration toward cloud computing and multi-cloud strategies. So I think in terms of operational forces, those are here to stay, and we can talk a little bit more about blockchain technology. I just wanted to share, perhaps before we go there, more of a boardroom observation as well. You know, this notion of an institution thinking beyond its profit profile. So this notion of stakeholder capitalism. So how well are you doing in financial terms? Certainly critical, but also how are you dealing with the people around you, the communities, the planet, and what is the essence and the purpose of your institutional mission? The ability to maintain that one social license in an operating environment became much more critical, and having a narrative and the substantiating data to support that narrative is a fundamental shift, I think, that has been yet again accelerated as a result of the COVID environment. So, you know, one piece is operational, the other piece is strategic. They're both obviously intertwined, but there are some reflections for you.
You mentioned blockchain technology. Curious as to how you think that specifically is going to impact how banking is done and how we interface. We know that right now, when we trade stocks, for the most part, humans are not involved in that, right? Blockchain is seeking to essentially extract that middleman, something that's core to Wall Street and financial transactions. Tell us a little bit more of how you see that manifesting and being adopted, say, even within the next 5 years.
The overall trend is absolutely toward greater automation in markets. You know, we had the privilege of working with over 200 stakeholders, public and private sectors, across 8 different workshops and a survey. And we put forward a report. It's in the public domain. You can find it on our website, called DLT and the Future of Capital Markets. And it really went to look at how well DLT, the pickup of DLT across different use cases. It made an attempt. I mean, there's a lot of hyperbole around blockchain. So we tried to really focus on where the applicability, where are these use cases and what do they look like? And we saw a number of really interesting examples, be it with FX netting, some of the securitized products being digitized across their life cycle. We saw certain repo functions and transactions being repurposed on DLT. So a lot of very specific use cases, either by idiosyncratic institutions, so one institution, but increasingly a number of institutions coming together to deploy that technology. I think that is telling. One of the key learnings from this work was not that we are entering into a complete disintermediation of middlemen. I think that's not where we're heading in the near term, but we do see increased adoption, and that the critical decision point on whether or not DLT is adopted is really the use case that's in question, and really looking at that very concertedly and seeing whether or not DLT is the right fit. So bottom line, increased adoption, no wholesale disintermediation seen at this point in time. It's a set of building blocks as we move forward.
Matthew Blake of the World Economic Forum, thank you so much for your insight. So appreciate it.
Good to see you again. Thank you very much.
And that'll do it for this special on the future of finance. Stay with us at Yahoo Finance for the very best in economic and business news.
Welcome, everyone, to A Time for Change. I'm Alexis Christoforous, along with Marquise Francis. As the NFL gears up for Super Bowl 56 this Sunday, the league continues to deal with fallout from the explosive class action lawsuit filed by former Miami Dolphins head coach Brian Flores. Now, Flores was fired last month despite posting 2 straight winning seasons. He is suing the league and 3 teams, the Miami Dolphins, the New York Giants, and the Denver Broncos, alleging discrimination and racism in hiring practices. And that's despite the NFL's longstanding Rooney Rule, requiring teams to interview candidates of color for head coaching and senior positions.
And after initially rebutting the claims, saying